Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, July 26, 2007, and the market's closed. We had a really big volume in here today, and that was pretty panicky action, I think. The spiders lost $3.36, down 2.2%. I think a lot of people got burned on this market because they were looking at Apple thinking that that was going to affect the rest of the market, when in fact it had really no effect on the market whatsoever. Maybe accounted for a little bit of the outperformance of the Nasdaq 100 today. But the spiders came down to the prior resistance level that we had seen actually after the, right before the February correction. And that resistance did act as support intraday. And it's also just above the rising 200-day moving average. We had a break of this trend line that I was kind of thinking was going to hold as support, but wasn't really ready to get involved on the long side. If you listen to yesterday's video again, I must have said go slow or be cautious about a dozen times in there, and this is why. It's not always going to happen this way, but defense wins the game in this business, and this is why I don't like this is why I always say that picking bottoms is the hardest job there is on Wall Street. When we look at the 30-minute time frame, again, we want to see that we've got a very rapidly now declining 5-day moving average, and let me just switch something in here. I don't know why it wasn't updated properly, and it still doesn't appear to be. I guess that is not where it closed. Let's do something else. Let's just change that up. All right, so my 30-minute chart doesn't want to update properly. Here instead, let's look at the 10-minute time frame. The 10-minute time frame, again, we've got a 5-day moving average declining. We've got this pattern of lower highs and lower lows. The market, this one, the S&P 500 was obviously a lot worse today than the Nasdaq. But like I said yesterday, I thought that the best place for most people was sidelines or in cash. And now, though, it looks like we're starting to see real big volume in here as it started to recover at the end of the day. So let's take a look at a 1-minute time frame, and you can see that it was below the daily VWAP pretty much all day. The market did make that lower low right here and then make a higher high, and we saw a recovery up to the VWAP, but that VWAP is what held it back at the end of the day. So the S&P was definitely weaker than the Nasdaq 100. And I'd say, listen, tomorrow's going to be another volatile day. Probably a good day to take a long weekend. Let's take a look at the IWM, because this market got pretty smashed down pretty hard today. That 200-day moving average did not hold as support at all at the $80 level, obviously. And this is a pretty serious breakdown, in my opinion. This is the market that's been so strong since 2003, outperforming every other area of the market. And now, when you look at a longer-term chart, we're looking at just trend line support. It's tough to say where we're going to find it. We broke this uptrend from last year's lows, so it's there's still a lot of problems in here. We're definitely oversold. We've got huge volume. Big volume tends to peak at turning points, so I'm still not calling a bottom in here, but we are seeing some good signs of a little bit of recovery in the intraday price action here at the end of the day. But again, for most people, it's probably best off to be in cash on the sidelines. There's no reason to really be buying in here. I'm sure a lot of people got hit very hard trying to buy the bottoms in there today, and the bottoms just weren't able to be bought. For most people, the Nasdaq or the S&P, why do I always do that? The semiconductors came down to their rising 50-day moving average. I said last week, or about a week and a half ago, that you should have been out of your semiconductor profits somewhere over in here on the 20th, if you go back and listen. And we had a declining 5-day moving average. We give the benefit of the doubt to the sellers. I just want to point out again, on this blog, the time frame that I primarily speak about is more of a swing traders type of time frame. That is the trend for 3 to 5, 6, 7 days. I'm not going to update intraday and answer questions about whether I think a bottom was made every time it finds a little bit of support, because that's not the purpose of this, and it'll just take too much of everyone's time. But as long as this 5-day moving average is declining, generally I'm bearish. I do think that there's going to be some great day trading opportunities, but you've got to be very disciplined about taking losses and position sizing if you're going to do that. It's a great way to trade if you're good at it. Most people aren't. So I'm going to refrain from really detailed intraday comments any further. And so these semiconductors, they've come down pretty hard. Again, I wouldn't be a buyer in here, but let's wait and see if the market can stabilize a little bit, and then see if we get a retest of these lows perhaps in a couple days. Maybe we get a little bit of what I'd really like to see tomorrow. Now let's take a look at the Qs while I'm talking about it. The Qs came down to this prior level of resistance, pretty close to it. It exceeded that, almost tested the 50-day moving average. And again, look at that heavy volume. Probably a turning point for the short term, I would say. But still, you know, the uptrend is still intact. We did break. Let's take a look at the 30-minute time frame. We did break, of course, this trend line a couple days ago. That's what really got me bearish with this head and shoulders pattern. And I was looking for a target right to this level. That level was reached. Intraday, I had said that this is also the 50% level, 50% retracement level, that is, as well as the daily R2, S2 rather, level. And so those areas lined up to form an important area, but it didn't mean it was a place to buy. Like I said, there was still no evidence that it was time to buy. What I'd like to see is maybe a rally up to that trend line. Maybe then 2 or 3 days later we come down, retest, maybe make a lower low would be ideal down near about 48. But the market bounced real strong here. Look at this last half hour. Look at the huge volume in there in this big candle here when it went from 48.50 up to about 49. So the buyers were definitely in there covering their shorts or whatever, but we've still got the potential for some resistance right around this 49 level. And again, the neckline of that head and shoulders pattern was right around this 49.60, 49.70, and it was really going to take, like I said yesterday, a move above there and a hold above there for 30 minutes before I was willing to give the benefit of the doubt to the buyers. We've got a declining 5-day moving average. There's still danger in this market. If you're a day trader, there were some great opportunities in here. I got involved, so I won't give you the details of my trade because that's not what this is all about. But the market did rally straight up to that level that was, you know, the S2, which then acted as resistance over here, and also came up to that S2 and the daily VWAP. That's where I sold my position initially. That worked out well because I guess a lot of people were watching it for those two reasons. First of all, daily VWAP and the S2, which a lot of times when it breaks as support will act as resistance in here.